Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we'll do our daily technical analysis update of commodities. Again, I'll work through the dollar, yields, precious metals, and then through commodities that I follow. The reason I don't go over too much else is that I just don't think the opportunities are. I think they're all in commodities and precious metals over the next years, which started in the year, I would say it started in 2016, 17, 18, 19, and then 2020 got really interested in commodities. And I'm basically focusing more so on commodities than I did at any time that I've been following, I'd say, the markets. And I started following the markets back in the mid 2000s. So the mid 2000s, I noticed the last half that bull market. And that's what really got me interested in commodities and precious metals and all those different types of investments. And then I really dove into the cycles between 2004 or 5-ish all the way till today. I've really been focusing on cycles and trying to figure out these cycles that we go through. If you guys need any help with anything, definitely check out the finding-value.com Platinum membership. Use the word discount in the coupon code and get a discount for the Platinum membership. We have a 7 a.m. question and answer meeting session on Saturday, 7 a.m. Mountain Standard Time for the Platinum members question and answer. So let's dive in. I'll give you my financial opinions here. We've got the DXY, and the DXY, when you look at these charts, really it's about momentum. And what I look for, if you just kind of look at the downward legs, call this a down leg here. We've got these little down legs here. We've got a smaller down leg. We had a little bit of a poop out there, and then we have a little small guy there. So I think the momentum slash velocity on the downward move is rounding out, which usually you get this slowing in momentum. Think of it as a car applying the brakes. And now we've got this kind of upper movement there of those two big candlesticks and smaller down pressure. So I do think that this is trying to bottom out. It's not a clear bottom. Usually you see the selling pressure really dive down, and the buyers haven't jumped back in yet with substantial force by any means. So we're slowing down. Is this thing going to turn, or are we going to kind of be in a period where we kind of just consolidate for a little bit and then dive back down lower again? Tough to say, but I'm watching it. I think the buyers and sellers are starting to equal each other right where we're at, and then we got to see what the next move is. This is a falling wedge that we've broken to the upside that would suggest we move higher. And a higher dollar means potentially that other currencies are getting weaker, or we are getting relatively stronger. Could be market driven, could be those other countries driven. I still think that, you know what? I'm kind of neutral at this point for the DXY. I think we've had a lot of monetary tightness through here. A lot of monetary tightness. That tightness is easing off, and now it depends on the tightness, the monetary tightness of those other currencies. And if the other currencies become a little bit tighter, I think we're going lower. If we don't see that, if we see loosening in those other currencies, then we could go higher again. But to me, this does look like the overall movement wants to go lower on the bigger, longer term view with a pattern that looks like this top here. It looks like the Batman pattern. So that definitely looks like a longer term top. But again, we'll see what the short term has in store for us. And I've never played the short term. I've always played these longer term types of moves. The 10-year yield, slightly lower. And what's concerning here a little bit, to me at least, the old paradigm was stock market goes down and then yields would go down with it. They would also go lower. But here, we're not seeing that. I mean, yields are basically holding up. And to me, it looks like it wants to go higher. Looks like yields want to go higher in the face of a stock market that is weak. So what that is signaling is that we could see bonds and stocks sell off, and that inflation could be sticky. But everyone that I know, they're all screaming recession, 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 and that demand for commodities is going to get slaughtered. Now, I'm kind of in the camp that the commodities are causing this. That's kind of where my head's at. Stimulus money. Then we might have a little bit of a disinflationary period. I don't know what that looks like necessarily. I don't think we've really seen it in history. Everyone's pretty much convinced that the business cycle is ended and that the housing market's going to crash and everything's going to crash. I'm remaining open because we've got 10-year yields that are remaining elevated. They're sitting there. We've got a falling wedge broken to the upside. We're seeing weakness in the overall markets, and the 10-year yield's just sitting there flat. That should say something. People aren't running to bonds, at least not in mass, like we would have seen the past 40 years. Bond prices, see, they're flat here, but they've been tracking lower in the face of a market that looks like garbage. I mean, the overall markets look like garbage to me. And yes, the overall market's going down could drag some of our stuff lower with it. It's understandable. When liquidity comes out of the market, it may come out of everything. That has also been seen historically. But right now, the money's not going into bonds, really. It's just sitting there going flat. And this is after a monster sell-off, a just complete monster sell-off this past year in 2022, where we've seen a massive waterfall decline in bond prices. Now, I don't know if bond prices have a problem, like bonds, and people think that bonds have problems, like we could be going into a major debt crisis, currency crisis. I mean, maybe that's what they think. I mean, this to me looks like we've got a nice head and shoulders top there, which is a reversal pattern to head lower. And we're obviously have gone a lot lower, but I'm not convinced that this is just going to go on up, guys. We could see a small short-term bounce like that and then head back lower again. So we'll watch it. Obviously subscribe to the channel and all that. We'll watch together. But I'm just watching this, and I see overall weakness in the markets, and bond prices aren't doing anything. We're going sideways, and I mean, yeah, we're slightly lower in yields, but people aren't running into these products here. Downtrend line break to the upside. That makes me think we want to go higher in yields. Now, if we're going higher in yields, that means we have an inflation problem still. And where's that inflation coming from? Stimulus money, yep. And there could be some other things with fiscal stuff that's going down, or going on, I should say, not down, but going on. So we'll see where this thing heads. It's obviously we've got a nice good support there, and we've broken to the upside a little bit there, and today is slightly lower, but it's not like people were just ramming their money into bonds here, and yields would have fallen. The TYX TNX ratio, it's just hanging out. Slightly stronger dollar, slightly weaker yields. It's kind of neutral for gold and silver, and I know we got some selling pressure in gold and silver today, but we'll walk through it. This is the CRD index. We've broken out of this pattern here to the upside, the breakout, the retest, and we've also broken out of this trend line and did a little retest today. So I think that still looks excellent for probably oil, because oil's the main guy here. So we're seeing a lot of shifting in the markets, probably tax loss selling or whatever else is going on. And maybe people are trying to sell some of their oil stocks to lock in those gains, because that's basically the only thing that was up this year, up in any meaningful way, I should say. But the CRB index still looks great for a move higher. I still like the way that looks. We're just working our way through all this resistance that we're at, and that's that big resistance line coming through here. We basically came down to that support level here, there. You can see all those lines that we were trading at. And we just came back, and we're right at that support level, and we're putting in a little wick at the bottom. This is your falling pennant formation, where we're going to eventually, I think, work our way on higher. And I know this depends a lot on the overall markets too. I mean, if people get scared, I mean, there's a possibility we do kind of roll over a little bit before heading higher. I don't claim to know the short-term little market movements, But I think big picture view, guys, if you were to like back out and take a look at this, yeah, we're going to kind of go between these two blue lines, get close to it and then fall on back because we've got some good resistance through there. But if we can clear this, get up on top of this stuff, oh my gosh, this is going to be a big move. And this could be like the wave one pullback in a bigger, larger third wave. So each one gets these like little waves that come up in a three up wave pattern. And this is the first wave of a much larger wave, I think, before we get a big, long third leg out of this. At least that's what I think is potentially coming. The CRB to S&P 500, it's still looking very good. We do have a little wick at the top, but overall, it is outperforming the S&P 500. But I think the S&P 500 is going to be weak. And I don't want to be in that S&P 500. I think we're going to see continued weakness. And if it's an inflationary type movement and they keep increasing interest rates, maybe not as fast of a pace, I still think that will put pressure on the overall stock market and bond market. Now, looking at gold, gold's down $21. We're still in this kind of uptrend channel. I still think it looks fine. I like the little bounce at the end of the day that we got there, a little bounce at the wick. At least there's some buyers showing up to the party. They're not just throwing in the towel, selling this thing off. So it looks good. We're in the upward channel. We just had a larger sell-off today. Silver also looking actually pretty dang good. We have a large up candlestick, and then these guys are small selling pressure days. So whenever you cover distance, if you were to do like distance over time, that's velocity. Force is basically using acceleration in that. So you're accelerating something. So that's basically your distance traveled over a time frame, which requires a lot more force. And what I like to see these big up candlesticks in a very short period of time, and then smaller pullbacks. I call it a stair-stepping pattern. We still have that pattern there in silver, which means that by looking at these candlesticks, I think it's going to continue on its way higher on a grind on up movement. So that grinding means that you go up, step back, kind of like that. Not a blow-off type movement, but a grind higher. Platinum also selling off some, but we're still at this support level. I did buy some physical platinum today down at this bottom level. I said, you know what? I need to buy some. I wanted to get some physical metal. It looks like that was winning on the Twitter of what I should buy next, and I bought a little bit. And I do like my oil and gas, don't get me wrong, but I got to always take chips off the table, take some chips and put it off the table. Take it off the table, throw it in the bank, so to speak, and that's what I consider physical metals to be. But gold, silver, platinum, I still like the physical metals, very much so. And right now we're right at support for platinum. XEU to gold ratio, looks like the gold and silver miners outperformed the metals themselves. Nice little big bullish engulfing there today. So that's looking good. If we zoom on out, we still need to break this line for what I call it, need to break the line for happiness. That's the happiness for gold and silver mining companies. And we're still kind of moving around. We've got these lows that are stepping up. Those are higher lows. That's exactly what we see in a bottoming process. Now we need to start breaking out of that trend line. We need to start making a positive move in a positive direction. And right now, we're just kind of flailing around, kind of moving sideways. But this does look good with this bullish engulfing today. Hopefully that's the start of a move that we get going higher. It does not mean that it necessarily has to do it immediately. What I normally see is you start to see these bullish engulfings forming all throughout, and you can still go sideways, and then it'll start to work its way on higher. So that's the start of what we're seeing is this bullish engulfing. Hopefully we can start moving on up. GDX just moving sideways. It went down less than the metal itself. That is a form of strength. So we're right at this resistance line going across here. We're right there trying to break. Once we break out of it, guys, and we can get up on top of it, then we can see where we can go from there. So that's GDX. SILJ also right at kind of a resistance. We're getting some resistance areas that we're coming into. We just got to break through this garbage And then I think once we can break through it, it's going to be a grind. Don't get me wrong. This isn't going to be quick, guys. It's not going to be quick because we've got a lot of overhead resistance. This whole buying and selling pressure all through here, that's all overhead resistance. We have to work our way through all that to get back up, and then we can do a moonshot. But we've got some work ahead of us to get through all that. Crude oil. Now, I know you guys. I've got some guys that follow me that they're like anti-crude oil. They think this recession's coming and that demand's going to get destroyed. Demand destruction is very rare. We're talking like great financial crisis type stuff with deleveraging in the market. I don't think that deleveraging exists in the market, at least to the extent that 2008 has seen. So I think oil looks absolutely fantastic. It was flat today. I call this a bloody nose, which is a continuation pattern to the upside. That the overall market was pretty weak. Crude held up pretty dang well. And we've broken the downtrend line here. We've consolidated a little bit right on top of it, kind of that back test, and now we're starting to move on up. I still think that we could have a positive move to the upside in the crude oil price. Natural gas down to $5. We were down 5.14%. We're getting down to that buy area. We've got two strong support levels. The first level is this guy here that we're playing with. The second level is at $4.30-ish, somewhere in that range. That's the big long-term resistance level. And a lot of the times what you do is you break out and then you come on back. You tag that line and then you go again. This is your wave 1, this is your pullback of 2, and this is your wave 3. I think that's what we're doing. And it looks very much like a Livermore accumulation zone, where you do a 1, 2, 3, 4, 5, 6, 7, and then you make a super spike. It doesn't mean that we can't get down here. Doesn't mean that we're going to be riding this line for a little bit. I don't know the time frame that this is necessarily going to happen in. I think it's going to be shorter term, but we're riding this line right here. And big picture view, everything looks fantastic. And you got to create a timeline where you're looking at this in terms of a decade. That's the most important thing. This started in the year 2020 over here, and we've been moving on higher, and it's basically at the end of 2022. Okay. Go. XOP, yeah, you know me, down 3.15%. This is the exploration production companies. Now, overall market was getting hit pretty hard. I know 3.15 may sting a little bit, but I'm going to give you a little bit of hope. This is a good bounce at the end of today. So if I were to look at this from a 5-day look at it. So this is the past 5 days. You can see here that, let me just back out a little bit here. I always like kind of backing out. We're kind of coming in and we're kind of consolidating here. And a lot of the times what happens is you get down and you get to this like slingshot cheetah pattern where you break out a little bit and then you're like, okay, we got to move higher here. Well, we moved higher throughout the end of that day. And if you were to kind of look at this, I were to kind of draw this in, you kind of come in and you get like this kind of double bottom pattern. And it looks like we kind of beeline down today, but we're coming back up. So hopefully we can get some buying pressure here to come back into the markets and push us a little bit higher. So that's the daily candlestick with the wick at the bottom. Buyers came in at the end of the day and bought that back up. And it looks like we're trying to hold this line here where you kind of come in a downtrend fashion. We break that downtrend. We kind of go sideways, and then eventually we'll work our way on higher. Looking at OIH, which is the energy service companies, very similar pattern. We've got this large selling pressure move here. A big, strong reversal candlestick came down. We kind of bucked that trend and kind of held this higher high. And that's still holding. And I do think that OIH, energy service companies, are going to head higher. But I like this day-to-day with the buyers coming in at the end of the day. Keep in mind, we had a pretty weak overall sell-off in the markets, and I'll get to that in a little bit. So this thing is really riding that train, and we had a pretty big up year, but this, guys, on a big long-term scale here, I mean, we've broken this downtrend line. Like, that is huge. You have to keep that in mind. And anywhere in this general vicinity, I am going to be buying my favorite companies. So I'm going to cost average in, irrespective of recessionary fears or whatever. The chart has a breakout. We've broken out, and it still looks very good. Sprott Physical Uranium Trust. Let's go to the dailies here real quick. There's a battle going on here. Sellers, we got up close to this resistance line, and they sold us off. The thing that we want to look for, if we're looking at it from a long-term perspective, is when we look at the right-hand side, we want to look to see where these lows are. Are the lows coming on up as we come back? The answer is undeniably yes. Now, if we come in back here and we put a low somewhere in here, that's actually positive because our lows are still coming on up. We may come back, we do one last little move. However it looks, I don't know the path it's going to take. No one knows that. But what I can see is we've got the big buying pressure candlesticks all through here, and the selling pressure is all smaller. That's a move or a recipe for a move higher. We got our move higher. We're coming on back. We're getting a little bit more selling pressure up here. You can see those red candlesticks are starting to gain some traction there. So we've got a little bit of a battle on our hands. But as long as we hold the line and we keep moving that line towards the resistance area, we are winning as bulls. So right now, I think the bulls are doing fine. You can see some buyers are coming in. The green army starting to show up a little bit. But I'd still like to see bigger green candlesticks, more buying pressure coming in to say that for a fact that we're going to go higher. I haven't seen it yet. It's a battle right now. Buyers and sellers duking it out. Uranium, URNM, it was looking pretty dire throughout the day when we were down here because I was like, man, that's going to be a pretty big candlestick on a bearish engulfing. But buyers came in and bought it back up. The energy sector, oil and gas and uranium, is looking okay. It's looking okay, but the overall market looks like complete and utter garbage. Now, some people are going to say that the overall market's going to drag this thing lower, but we're seeing strength right now. Down market, we're seeing strength in URNM. And there's our little guy on the dailies there putting in that big candlestick. Now, if I were to go to like a 5-day action, you can see that we're kind of bouncing off this zone in here. It's kind of hard to see. You can see like we're doing the humps again. You can kind of see that action there. But we came up at the end of the day, towards the end of the day, with the momentum heading higher. So that's good. That is good. Hopefully we can carry that momentum into tomorrow. And I know that's hard to see there, but looking at, get off logarithmic there. Looking at TAN. TAN is still just chopping sideways, down 3.26% today. You can see it right there on the dailies. But there it is on the big picture view. You can see that side mimics this side, and that we could potentially have a move higher here still. I'm still in that camp until the sellers push us lower. Looking at COPX, we've got a little bit of selling pressure today, down 3.57. We got the bullish hammer candlestick. I still think this looks good to go higher. Over time, a grind higher. Lithium also getting a little bit more selling pressure. Little candlestick at the bottom, little wick, I should say. Bigger picture view, though, this looks pretty bearish, like we could go lower still. So I think this tracks the overall markets a little bit better than some of the other commodities. REMX is also tracking the overall markets a little bit more so. So we could see some further downside here. Although today we do have a little wick at the bottom, a little bit of selling pressure. We'll see if the buyers step in, but it seems to track the overall markets quite well. Now here's SPX. This does have a wick at the bottom. Hopefully we can get a bounce here to move to the upside with the buyers coming in. I think it will lift the entire market, but again, if you look at it from a longer term perspective, and we look at it from a monthly term view, we still have a lot of selling pressure here. That's a bearish engulfing if we don't pull that, we'll call it the butt end up of it. So if it closes this month strong to the downside, I still think there's more downside in the S&P 500, and same with the NASDAQ. The NASDAQ's still looking like garbage, where I think we could head lower, especially from the monthly candlesticks. On the dailies, though, we do have a wick at the bottom, and it does look like we strengthened towards the end of that day. Emerging markets actually look very strong compared to all the other ones. We've broken this downtrend here. We're holding our ground to some degree, and it does look all right over here for a move higher. XHB, this is our home builders, still moving sideways. I would say this looks ultra strong in comparison to the other parts of the market. We're down 0.87%, but that still looks like we have a chance to go on higher. Moo also heading lower, but with the big kind of hammer candlestick, that's usually a bottoming pattern. Hopefully we can get some buying pressure to head higher. We've got copper getting a little bit more of a sell-off here. We're right at this resistance line. This is like the last resistance line before a potential big move could happen. So that resistance line is providing resistance. And we had a down day today, and we'll see where we go from there. Lumber, stronger today, right at support. We'll see if we get any sort of upside momentum. We've got iron ore, also looking good, up a little bit. We've got nickel. Nickel slightly lower, but again, nickel still looks great on a longer-term view for a move higher. So I like that one. Aluminum, strong in the face of a weak market. I think that's going higher over time. Big bull in aluminum. Very big bull in aluminum for myself. Baltic Dry Index continues to go higher. We've broken out to the upside, China reopening. I think the Baltic Dry Index looks great to move on up. Newcastle coal right against that resistance area, and we have to break through that. Are we going to break through it? You know, I don't have an opinion on it, really. I think we're just going to move sideways until I see a break. And then we are still consolidating in Ethereum and Bitcoin and these ones moving sideways. I wouldn't say they look horrible. I wouldn't say they look great. We need to see buying pressure step in here if we are going to go higher. If we're going to go lower, we're going to see a lot of selling pressure. But we don't see too much selling pressure here. We'll see what happens. It's been a battle. It's been a battle. But that's what I've got for the overall market, guys. I still think that energy probably looks the strongest. Precious metals still look strong. Commodities in general look strong. We do see some weakness with the overall markets. They look like poo-poo on a longer-term time frame. Could we get a short-term bounce? We'll see, but it might just roll back over. I think overall, inflation's still there. Yields are still pretty strong. Bond prices aren't falling. And I would say that commodities are still the spot to be, in my opinion. All right, guys, give me a thumb up for the content. Subscribe to the channel if you haven't already, and we'll catch you later. This is Finding Value.